My title slide pretty much tells you how I'm feeling about the markets lately. To say they're unpredictable is probably a massive understatement, but there is a golden lining to that situation. This is the kind of rally you and I and everybody else has never seen before in the gold price. I mean, it's crazy. It's basically $1,000 since the beginning of this year, and I think there's several reasons for that. I'm always very leery about making gold predictions. I mean, I'm not, in the strict sense of the word, I'm not a gold bug. I mean, I view it at a macro level, and things are just so uncertain right now. I'm a bit leery about predicting, but I do think we've seen changes that are fundamental enough that this could be a new era. And I realize just by saying that I've probably jinxed it. But and just so you know, the way MIF works, the end of the day today, at some point, you will get the marketing materials from these companies. And in this case, it's going to include this slide deck because this is a very wordy slide deck. And I don't want you guys having to try to write all this stuff down. Basically, there's several things that have helped gold. A couple of them are the traditional things, at least until recently. The U.S. dollar, it's off quite a bit. Yields until recently were off quite a bit. But I think that's not the main reason here, because this is not the usual suspects that generated this kind of buying volume. It's not gold bugs. I mean, this is a totally new set of buyers. Perhaps the biggest set of buyers, nobody's 100% sure, is central banks. Central banks have gone back to deciding they want gold as a reserve asset. And all the stuff that's been going on lately with Trump and tariffs and stuff, that just strengthens their conviction. I mean, gold has one really, really important attribute that almost no other asset class does, and that's that it has no counterparty risk. Gold is about the only asset class where your asset is not somebody else's liability. So there is basically no counterparty risk. And when you think of what a shit show the last few months have been, that's a pretty huge advantage, where you don't have to worry about whoever or whatever is on the other side of your transaction is going to do tomorrow. That's a huge, huge, huge advantage, and I think that's driving a lot of the buying recently. And I think that buying is coming from a totally different set of entities. Some of it's central banks, but I think there's banks and other financial institutions, some hedge funds, but there's a lot of them buying it. It's basically the anti-dollar. So it's got that advantage. And obviously with what's going on in the U.S. right now, a lot of people aren't so sure they really want to be up to their eyeballs in U.S. dollars. But just not having that counterparty risk is huge, huge, huge thing. And the other thing that happened fairly recently here, gold I think it's happened now. It's being reclassified as a tier 1 rather than a tier 3 financial asset. And that makes it a way more comfortable reserve holding. Basically you can collateralize it, which you couldn't. I mean, there are kind of ways to do it, but it was hard before. If it's a tier 1 asset, it's a lot easier to collateralize. And that brings in a whole new set of buyers that just weren't there before. I think, I hope, that, over the next 2, 3, 4 weeks, we're going to see this tariff stuff settle down. I mean, I think Trump's going to be a bit less belligerent, but, the guy's a definition of unpredictable. So I'm not going to say anything for sure when it comes to Trump. You just don't know what he's going to do tomorrow. Now, this is an example of why I think Trump backed off on the tariffs. There's going to be 2 charts here. The first one is the U.S. dollar index. Like I said, it's dropped 10% this year. And that's a pretty big damn move for the world's reserve currency that's got the biggest float of really any asset in the world. A 10% move is a huge move. But if you look at the area that's circled, and that's sort of late April, you can see there was a real dump for 4 or 5 trading days there. And keep an eye on that in late April. I'll be back to that in a second. This is a yield on 30-year T-bills. It's the long end of the curve, and it's the preferred holding for really large entities like central banks. that are basically planning to hold it as a tier one asset and probably never sell it. They just roll it over. There's a move there at the same time as the dollar move you saw, where bottom to top, 30-year yields moved 80 basis points. That is a freaking unbelievable move in 3 days. I've never seen yields move that much. And the fact that you saw the yields go ramping higher at the same time the US dollar dropped, the reason for that, I think, is that what made that happen was sales of Treasury bills by offshore entities who then wanted to move back to their home currency. So the transaction involves selling Treasuries and selling the US dollar, buying their home currency. That's why the US dollar and yields dived at the same time, because that's not something you normally see. It's a very unusual situation. According to guys that know the bond market better than I do, that trade it every day, they're fairly certain, and they're not signing it in blood or anything, but they're fairly certain that selling came out of Japan. Some of it might have also come out of China. That's a problem. I doubt that Trump understood what was going on because, well, he's a moron. But, you know, the Canadian audience. But, you know, I think that was a warning shot. I mean, I doubt they phoned him up or anything. I think they just did that market activity with the knowledge that guys that understood the bond market would understand the message there. And one thing to keep in mind that for the last 30 years, give or take, China and Japan have pretty much been the predominant, are almost arguably the sole financiers of the U.S. Their purchases of Treasury bills is what's financed U.S. deficits for the last 30 years. And that means they own a shitload of Treasuries, trillions and trillions and trillions and trillions. The simple truth is, if they really decided to dump it, I don't personally really think that they would, because the problem is, if you're going to sell Treasuries, what are you going to buy? I mean, Treasuries are one of the most liquid markets in the world. If you're going to sell those, finding something to replace it, you know, be it Euro bonds or something like that, is going to be really difficult. It's just, there's just too big the financial flows involved. But that doesn't mean they can't threaten it, and it doesn't mean they can't sell some of them. And if they sold, you know, I'm just pulling a number out of the air, if they sold half their holdings, you would see U.S. bond yields go up several percent, and the U.S. dollar would go to 80 maybe. It would be a huge move. It would be a guaranteed recession for the U.S. Frankly, they'd be screwed, because their yields would be up at 12 or 13%, and they'd have to find somebody. And based on what's happened since the start of the fiscal year in the U.S., I mean, for all our talk about, you know, Doge and whatever, you know, all this crap about cutting spending, right now the U.S. is running on a pace to have a $3 trillion deficit this fiscal year. They got to find somebody to buy $3 trillion worth of bonds to cover that. If they piss everybody off, they're going to have a problem. So my assumption, based on what happened in late August, the fact, like 2 days later, the Monday after that, Trump announced, that's when he announced a 3-month pause. And this was the reason, I'm sure. I think we probably see this settle down just because of that, because I think some cooler, calmer, and, let's be honest, smarter heads surrounding him are saying, like, you can't ignore this message. Like, you can be belligerent and you can say whatever you want to make the MAGA crowd happy, but the truth of the matter is, these guys own like $30 billion or $30 trillion worth of Treasuries. Like, you can't piss these guys off. I'm sorry, that's just how it is. You're going to get over it. So I'm thinking things are going to calm down a little bit. I'm not guaranteeing it. I mean, he's just such an unpredictable guy. You just never know from one day to the next what he's going to do. I mean, he does react emotionally. So, you know, if he thinks one of these countries is trying to push him around, I mean, he could do something stupid just to act macho. So I'm not making any promises about how things go in the future. But my underlying assumption to all of this is that things are probably going to calm down when it comes to the tariffs. Now, it's possible that could actually have gold back off of it, because I think this tariff situation, that's one of several reasons for the buying. I mean, I think other stuff like no counterparty risk is bigger, but there's no doubt that tariff uncertainty is part of it. So if the whole tariff situation calms down, gold could have a little bit of a pullback here. I mean, I'm not expecting an end of the world scenario, like a couple $100. Like when he first announced all these tariffs on Independence Day, gold dropped a couple $100 in the course of 2 or 3 days after that, and then turned when people started realizing how crazy stuff could be. So I would expect we might have a bit of a pullback if they calm down. But the copper lining to that parachute is we probably, fingers crossed, won't see a recession in the U.S. if this stuff calms down. If it doesn't, there will be a recession in the U.S. Unfortunately, I guarantee you there will be a recession here. If we can't deal with the tariff issue, there's just no getting around it. I mean, they're our biggest trading partner. If that trading relationship gets screwed up, there's no way we avoid a recession in Canada, and it could be a bad one. We should probably all be realistic about that. But I'm hoping we dodge that bullet and that things calm down. But no guarantees with Donnie. You just never know what he's going to do from one day to the next. And this is a very current copper chart. And I'm going to be honest. I mean, copper's trading better than I thought it would. I mean, I've been concerned really since the start of the year that Trump doing crazy shit was just going to spook people so much that he was going to generate a recession in the U.S. So I still think it might happen. I mean, if you look at current trends in unemployment and stuff it's definitely slowing down faster. It's not negative yet, but it's getting close to zero. So it's not going to take much of a push to generate a recession. But even though, even because of that, I mean, you see that big drop in the copper price. That's sort of around the same period, sort of after the Independence Day and the tariffs went in and everybody freaked out. The buying you've seen since then, one story I've heard that actually kind of makes sense is, nobody knows with these tariffs, are they going to be, are they going to be half the goods, all the goods? Is it going to apply to everything? I mean, most of the time when Trump talks about it, it sounds like they're going to apply to everything. So there's a school of thought that there's been pre-buying of base metals by guys who want to avoid the tariffs, because if they buy them now and 3 months from now, there's a 30% tariff with whatever country they buy their copper in, they're going to get nailed. They're effectively going to get a 30% price increase. So there is a story out there, and it makes sense that some of the buying that got copper back up in the last month is pre-buying because of tariffs, people trying to cover themselves. I don't know if it's true, but I mean, it makes sense as a story. But although I like copper a lot, and I'm happy with the way base metals are trading, I'm still a little bit leery because I'm still, I'm not going to be convinced we won't have a recession this year until we get through a couple of quarters and it doesn't happen. I think the odds are in favor of a recession, but hopefully it's not going to be much of one. I mean, that's pretty much where I think things stand right now. The good news is the move in gold has finally, you think it wouldn't take $1,000, but apparently did. It's been big enough and strong enough that we're finally starting to see outside money come into the sector. I think we'll see that continue if gold prices stay up. The simple truth is gold producers are going to put up insane numbers this year. They're going to make tons and tons of money, enough money that they're going to be, they're going to be front page of Wall Street Journal, those kind of numbers. So I think that's going to drive, and I think it already is, driving more generalist buying. So far, it's almost exclusively been producers. We're starting to see it now in developers, and I think some of the message of that is just in the last couple of weeks. There's been several very large placements by developers. I mean, Fireweed announced one yesterday that was $60 million. I mean, those are the kind of placements you don't do in a bear market. They're well priced. They've got relatively steep terms. They don't have great warrants. Some of them have no warrants. So to me, that's a pretty good example. Like, we're seeing new buyers come in, because the old fogies like me tend to be real jerks when it comes to trying to get warrants and stuff. So I think this is new money from the outside. I think that'll continue. It hasn't gone down the food chain much, but it's starting. There's starting to be a little bit of trickle down. So what I'm really hoping is gold stays over 3,000 here through the rest of the year. We finally start seeing money really filter down into the smaller companies and the juniors, and they suddenly find it much, much easier to finance. They don't have to offer big discounts. They don't have to offer full warrants or even half warrants in some cases. I think that'll happen if the gold prices stay up. But for now, things are positive enough that discovery stories they're getting pretty good traction by and large this year. I love discovery stories. I mean, I'm a drill play guy. That's not the safest place to be, or the place to be if you want to sleep at night. But that's where the 10-baggers are, and that's where the fun is. I mean, I'm an exploration guy, so I love the process of exploration. I love to see companies make discoveries.